Hi, I'm Sofia Song, Head of Research at StreetEasy. At StreetEasy, we aim to provide the most accurate real estate information and give consumers a data-driven view of the market. We take great pride in our objectivity, but we also know that our data can be complex and difficult to digest. That's why we're partnering with local real estate professionals such as brokers, appraisers, attorneys, and mortgage bankers to produce monthly market report videos. The aim of these videos is to break down the numbers of the report and recontextualize the data with the insight and experience of local real estate professionals. We just released our July monthly Manhattan market report, and today we'll be discussing this month's findings with Gomes and Fredrik Eklund, two very impressive agents from Prudential Douglas Elliman. The team specializes in the luxury market, and over the past 8 years, they have grossed close to $1.4 billion in residential sales. And you may recognize Fredrik as a star of Bravo's hit series, $1 Million Listing. We're here today at the Marble House, the crown jewel of the American Express Carriage House, located at 60 Collister Street in Tribeca, one of Fredrik and John's exclusive listings, a building in which they sold out in less than 2 months. And we're very excited to have them in our premiere video. So based on our condo market index, we're seeing that the market is slowly making its way back up. And our index has actually seen 4 consecutive months of positive growth. This month, we're showing that contract activity is actually up 22.3% since last July. So I wanted to ask, what are you two seeing this summer? Do you think buyer confidence has returned? And what kind of buyers are you seeing these days?
Yes, buyer confidence has definitely returned. I think it's sort of like the herd mentality. When you see the stock market doing well, everyone else wants to jump in. The real estate market has been doing exceptionally well. Inventory is very low, and people are jumping in. There's less fear, less risk.
Yeah, and you read so much in the press about these mega deals, 88 million, 100 millions, but what's interesting about the market this summer compared to last summer is that all categories, studios, 1 bedrooms, 2 bedrooms, 3 bedrooms, 4 bedrooms, all categories have been doing well and increasing over last year. Just the last month, we've had several bidding wars, just John and I. We've gone to best and final. This week alone, we went to best and final of 2 properties with multiple offers above ask. So that's we're welcoming that because we haven't seen that in a long time.
And even if we don't go to a bidding war, we very often now list a property and within the first week have a contract out and a contract signed in less than 14 days. And it's not just us, it's across the board.
So this month, we saw a 30% increase for starter homes and a 15% increase for family homes. And it seems as though with the hot rental market, more people are entering the market to take advantage of the low mortgage rates. So do you think people who are entering the market are finding it easier to get financing than those who are looking to upgrade into larger homes?
Well, I think that it's easier now, today, with financing getting a little bit better for people to actually finance. What's happening is that for the first time really in my career, you have a rental market that's peaking at the same time that the sales market is peaking. So you have these would-be renters that are saying, well, why am I going to pay this high price to rent an apartment when I can actually buy a home at a really low interest rate? So it really makes financial sense. So I think that that's why your report is showing that you have a higher number of buyers in that entry-level market.
This month's market report shows an increase in contract activity across all major markets, but the downtown market remained virtually flat with only a 0.8% increase in new contracts. And that's a big contrast to Midtown, which had a 36% increase in new contracts, and Upper Manhattan, which virtually doubled since a year ago. What's going on in these markets? What accounts for the difference that we're seeing in downtown versus Midtown and Upper Manhattan?
Personally, I think that it's because downtown you have more historic neighborhoods, you have lower buildings, whereas in Midtown and Uptown you have higher buildings, so it's more vertical. Because there was such a great interest in the past couple of years, there's been a lot of people moving from uptown to downtown, that inventory is basically gone, so there's really not a lot to sell. Now I will say that moving forward, there's a ton of conversions, and there's actually new buildings that would be built on land that developers earlier had a hard time getting the financing for. But now financing is getting easier not only for the end user, but it's also getting easier for these developers. So they're buying the land, and then they're also buying the buildings that they're converting downtown. So I think this time next year, you'll see an opposite. You'll see more activity in the downtown as opposed to less.
Yeah, we track the buildings that are about to come to the market downtown, and there's 105 buildings coming to the market. It's a lot. I mean, it's like when we started in real estate 10 years ago, it's like new development is back with a vengeance, and that's fun.
Yeah, right now there's a bottleneck, but I think in the coming months,
starting like October, November this year, and in February, March, there's going to be a lot of new and very expensive new development coming to the market.
This report this time next year is going to look very different. That's a good thing.